I never thought I was going to say what I'm about to say. It's a huge statement. Times are changing and the market is getting worse by the day. We're going to continue to see bank runs and major banks collapse. I'm really worried about this one bank that I'm going to share with you that I never thought would go down, but we never thought Lehman Brothers would go down either. Currently, there's $155 billion worth of commercial real estate that is at risk of defaulting. There's over 5.6 trillion of loans coming due in the commercial real estate market. The ones that are at the biggest risk are the office space. Everyone's always worried about the regional banks and talking about the regional banks. I'm going to share with you what I found and who I'm worried about and why I'm worried about it. And that is Goldman Sachs. I know, crazy. Right now, Goldman Sachs entered into the consumer debt world in 2016. And one of their partnerships was the Apple Card, which they started in 2019. They just announced that, Apple announced that they're no longer going to work with Goldman Sachs on their credit card. The Apple Card has one of the highest default rates of any credit card. And I can tell you why. I mean, when it first came out, they were just giving them out to anyone. No matter what, you were getting an Apple Card and getting approved. Not only is Goldman Sachs and Apple severing their relationship, they also announced that they're going to stop the relationship with their GM credit card as well. I have both credit cards. When you had an Apple Card, I mean, they took your level up high. I was surprised for a personal card. I'm used to business cards giving that high of a credit limit. The Apple Card gave a great credit limit. I mean, in the 5 digits. Same with the GM. When you got the GM card, they gave you the same credit line that you had with your Apple Card. I was like, okay, rock on. That's great. As responsible business people and bankers, I was like, boy, this is not going to be good in the long run. Now, both Apple and they've announced the GM card, they're not going to be doing that anymore. Goldman Sachs is down 36% year to year in third quarter 2023. That's massive. They're down to 1.8 billion. Now, believe me, I wish I had $1.8 billion, but for Goldman Sachs, being down 36% is a huge amount. First time ever, we're at over $1 trillion in credit card debt. You're starting to see the defaults go way up. You have to with the interest rates. I mean, you can't keep up with it. People cannot keep up with everything that is going on. There's $225 billion in personal loan debt, and Goldman Sachs started writing that in the past year heavily. They went into that market as well. Look for that to start seeing huge defaults. And this is before I'm even looking at the CMBSs. So just like there are MBSs, mortgage-backed securities, and that's what our government loves to play with, and they have tranche them every day, and they make billions of dollars off of bundling our mortgages and selling them off to Wall Street. They have CMBSs, which is commercial mortgage-backed securities. The amazing part about this is, guess who's number one? I'll let you guess. 1, 2, 3, yeah. Goldman is number one in CMBS. Those are the riskiest loans that we have in the commercial lending space. Everyone's always worried about the regional banks and those guys. They didn't lend 100 million, 200 million, 300 million on one office complex. That's when you start and you move into the CMBS kind of world, because you're looking at a non-traditional lender who's a conduit, an insurance company, a CMBS company such as Goldman. That's what you look at when you're dealing with those big office loans, because they're non-recourse, which guess what? I'm going to show you this. This will blow your mind. Who owns the CRE debt for the commercial industry? Well, 50% are the banks and lending institutions have 50% of the commercial debt. CMBS is 16%. But when I'm done with this, the other stat's going to blow your mind. Government agency pools make up 13%. Insurance companies are 13%. REITs are 5%, and pensions at 1%. The CMBSs, even though they're only at 16% of this lending profile, they own 71% of the major office building loans. Now think about that. 71% of the bad debt that's going to be coming down with the huge office spaces are the CMBS vendors. I mean, so Goldman Sachs is number one. Look for their balance sheet to take a huge hit. So you look at this and you go, okay, Goldman Sachs is down 35% year to year. Apple's getting rid of them. Allegedly, Apple's getting rid of them. GM, they've severed their relationship with that particular credit card. They're number one in CMBSs, and the bad office space notes that are coming up and are due, 71% of them are CMBS loans. I'm just saying. Never thought I would say Goldman Sachs, but that is one to watch as we go through this because it is going to be ugly. And that is a bank that's going to be getting hit from a lot of sides, from commercial to the consumer, that market that they tried to break into. They've even admitted in articles they could have done better. Yeah, you could have done better. You just gave cards to everyone. I mean, that is one way to do it. It's just blanket the earth with your credit card, but look for the default rates to be super high. If this is content that you enjoy, please like and subscribe. It helps the channel out as we continue to grow and really appreciate it. It's D Money. Rock on.